That's why I'm really paying attention right now. I think the market's probably wrong, and I think that it's going to set up for a whole bunch of opportunities as the Fed pivots fast and the economy goes into recession much quicker than anybody expects. This is the biggest monetary tightening in all recorded history in the shortest period of time. We've got rising commodity costs, and ISM below 47 is a recession. It's saying the 9-month forward ISM is going to be 37, and it's still going. So it kind of feels that we're going to go into a very sharp, urgent recession.
Welcome to Dream Richer. There is a strong conviction amongst economists that we are headed right into a recession. The millionaire and well-known crypto personality Raoul Pal discusses the future. As he argues, we will go into a sharp recession sooner than anyone can imagine. We don't know when or in what form the next recession will come, but we do know there are different ways to prepare for it today than there used to be. The old tried and true method for weathering a recession is through cash and high-quality dividend stocks with strong balance sheets. This method remains a great option, but now more methods have also sprung up to secure your wealth. One of these is investing in Bitcoin. Raoul Pal has been criticized many times for being an anti-Bitcoin advocate, with some arguing that he has been set up to the deep state themselves to get rid of Bitcoin. However, today he shows strong indications on why the Fed has failed the economy and the rippling effects we are bound to see soon. Perhaps the biggest concern of experts who see a potential recession coming are the big changes in the Federal Reserve strategy. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
So the market is currently obsessed by inflation. It's obsessed by the central banks. It's obsessed by interest rates going super high. We saw Bill Ack coming out yesterday saying, interest rates need to go up to the moon. I step back from the narrative and start looking at, okay, what is the reality of that? And I think the reality is that what we've actually done is utterly destroy demand already. We've had the largest rate of change of interest rates in history, the largest rate of change of commodities in history. We've had the largest rate of change of mortgage rates, all sorts of stuff. A very perky dollar as well, a strong dollar. That makes a big difference to this. Those things tend to be financial conditions tightening. We can see it in the equity market. We can see it in the housing market. You can see it in the crypto market. Conditions have tightened dramatically. That's why I'm really paying attention right now. I think the market's probably wrong, and I think that it's going to set up for a whole bunch of opportunities as the Fed pivots fast and the economy goes into recession much quicker than anybody expects. What you've got is an increase in debt. That debt has basically offset the increase in asset prices over the last 40 years. So people have borrowed money to try and make themselves wealthier because their wages didn't go up, but fixed assets did. And we've got the most indebted economy in all history now. This is consistent everywhere in the world, everywhere the central bank balance sheet increases, and it works across all asset prices, essentially, whether it's gold, whether it's real estate, it affects crypto, it affects stocks. And what's amazing is real estate is so good for this that I've looked at ECB money printing and then looked at German real estate, same chart, Swedish real estate, Swedish money printing, Canadian real estate, Canadian money printing, US real estate, UK real estate, Australian real estate, they're all the same. So what they're saying is every time the Fed print money, the purchasing power of the dollar goes down, which makes it optically look like the value of these assets are rising. Most of them are actually not rising in central bank balance sheet terms. So it makes it harder and harder for those poor people whose wages haven't gone up to stay up, so they keep borrowing money to do it, and it's a mess. And this is what's creating the 1% versus the 99%.
Despite an incoming recession, many believe that Bitcoin is the perfect solution to this. Why? Well, it comes down to four main factors. Number one, Bitcoin was built for it. Bitcoin was formed in the crucible of the US Great Recession. Bitcoin's anonymous founder aimed to create a currency that people could trust and would function without third-party intervention. Reason number two, Bitcoin is inherently diversified because it isn't subject to one economy's gain or loss. Rather, it represents wealth without borders. Reason number three, Bitcoin's total supply is capped, and added supply is decreasing. And finally, reason number four, Bitcoin is built to last. If we compare Bitcoin's attributes to those of other fiat currencies and cryptocurrencies, it's clear to see that Bitcoin is tailor-made to be an asset worth owning during a recession.
This is the biggest monetary tightening in all recorded history in the shortest period of time. We've got rising commodity costs, rising interest rates, and a strong dollar. Those three things together are extraordinary. So here is a combination of those three against the ISM, and it's already pricing in a recession. ISM below 47 is a recession. It's saying the 9-month forward ISM is going to be 37, and it's still going. So it kind of feels that we're going to go into a very sharp, urgent recession. And that's what the markets are picking up. That's what crypto's picking up. That's what equities have been picking up. Equities are currently pricing the ISM on a year-on-year basis at around 49. And eventually the Fed, sometime in the summer, probably after the June meeting, they're probably going to go, okay, we'll monitor the situation and maybe we won't tighten the balance sheet yet. That signal is the signal for risk assets, I believe. And I think we'll see growth end of tech, which has been utterly destroyed and is down 70% plus, and crypto, and probably gold actually, start to outperform along with bonds. And those should be the phoenix that rise from the ashes, and some of these other more cyclical plays will do less well. Those are the things that have been outperforming over the last 18 months. The big question is, what is it going forwards? Is this going to be a longer recession, in which case everything rallies and then comes back down again and the Fed have to do a lot more? Is that what brings the Fed balance sheet in? Is the markets roll over and the economy looks terrible? I'm not sure. My base case scenario is a V-shaped recovery from an absolute cliff edge, but it could be something more drawn out, in which case we've got a much nastier equity bear market to come.
It's clear from Raoul Pal's explanation that the dollar is bound to see a sharp collapse. Our whole economy is on the brink of a recession, and we could enter into it any time now, sooner than anyone imagines. A recession is a significant decline in economic activity that lasts for months or even years. Experts declare a recession when a nation's economy experiences negative gross domestic product, rising levels of unemployment, falling retail sales, and contracting measures of income and manufacturing for an extended period of time. Recessions are considered an unavoidable part of the business cycle. This means that over the next few months or years, we will see the economy struggle, people lose work, companies make fewer sales, and the country's overall economic output begin to decline. Do you agree with Raoul Pal? To learn more about the latest crypto news, watch these videos here.